5% conservatively, that is an extra $675 million of revenue per year just by spending $500 million to acquire $45 billion in AUC. So, I mean, that's another reason I bought the dip today. I think next year when these deals close, that is a ton of assets that they're bringing onto the platform. And those assets being brought onto the platform obviously is going to be very beneficial for their long-term trajectory in monetizing it. Now, that's not going to show up in fourth quarter. That's probably not going to show up till, I would say, third or fourth quarter next year, because they have to actually close the deals and then begin the process of yielding off those assets. So that'll take a couple quarters. But the point is, they have a lot of growth that's ready to get built into the underlying factors of the business over the next 2 years. And I think that's pretty exciting for Robinhood. Robinhood up about 0.4% after hours, 35.26. SoFi up about 0.33% after hours at 15.06. SoFi with the first $15 close since 2021 on SoFi. Absolutely incredible price action with SoFi. Okay, a couple more headlines, and then we've got Sam joining the show. So this one, we forgot to mention this right here. Trump's Crypto Advisory Council, which is this new thing that he's setting up, Reuters reported today, is expected to be the advising body that actually sets the framework for what the strategic Bitcoin reserve looks like. So Coinbase CEO already met with Trump. That was confirmed by Wall Street Journal a couple days ago. It was confirmed again by Reuters. You have a bunch of these different companies, Tether, Circle, et cetera, that are communicating with Trump as well. That's another reason Bitcoin went to 99,000 today. Bitcoin right now, 98,234. Not only is Gary Gensler gone, but you have an entire crypto advisory council that is going to be meeting with Donald Trump to set up that strategic Bitcoin reserve. Another headline from Trump. Remember when we said Trump bought that company BAKKT backed, which is a international crypto exchange? They just filed a trademark for a crypto payment service called TruthFi. TruthFi. So it looks like they're going to rebrand Backed into TruthFi. They also have Truth Social. The reason they have Fi is because people, call it DeFi, decentralized finance, all that stuff. So TruthFi, Truth Financial Services, whatever, with Truth Social is going to be this apparently holding company that is going to be under potentially just the ticker symbol DJ. Well, it will be under the ticker symbol DJT when the acquisition happens. BKKT, I believe, was up on this news slightly today as well, but BKKT right here, no, it was slightly down. It was up a little bit during the day at 34. Now it's at 31. All of this to say, whether you kind of like these moves or not, the next 4 years, it seems like are going to be bullish for crypto with momentum, because the president of the United States has a crypto advisory council and his company is acquiring crypto exchanges, which means we're likely going to see some momentum when it comes to crypto. Okay, let's bring on Sam to the show. Let's talk about Snowflake, Grab, get that thesis in, and hopefully everyone, including myself, can get more educated about those two companies. Sam, what's up?
What is going on, my man? How are you?
I'm doing good, brother. How are you?
Oh, I'm doing ecstatic. Let's go.
Two holdings doing pretty well today, I would imagine.
Really well today.
All right. So for those that don't know Sam is a big part of Chris's Patreon. You help manage the Discord, all that stuff. I'm putting Sam's Twitter right here in the chat. You've been on the channel before, so I'm sure some people know you, but for those that don't, this is Sam. I want to start off with Snowflake before we get into Grab. Let's do a quick 5 minutes on that, and then we'll have the rest of the time for Grab. So Snowflake's up 30% right here.
Yes,
what did the street get wrong when it was at 125, and why is it up 30% right now?
Well, I mean, there's more than a couple of things. Everyone was really afraid of continuing margin contractions, which has been happening for the last 3 quarters. Growth was slowing down. Net retention rate was slowing down. Net retention rate, basically, you got the clients that were signed up with Snowflake 12 months ago, and they compare that to the dollar amount they're paying today, and whatever that total amount is a net retention rate. And if that's declining, that means that people are slowly spending less the longer they're on the platform, or they're decelerating how much more they're spending. That's never really a good sign for a cloud company. I mean, it's very common over time, but it was happening at a very fast pace for them. So, the street is just pricing that in as it usually does.
So what did you see yesterday that would give us a 32% rise?
All right, dude, there's tons of stuff to digest from the earnings. First of all, it's a triple beat. Now, in today's market, that's not really a big deal if a company is trading at a premium valuation, but this company was trading historically at its lowest valuation it's ever had. It was at less than 10 times EV/NTM revenue. So basically, you take the enterprise value, how much cash they got in the balance sheet, subtract that from the market cap, and then divide that by the sales for the next 12 months, you get a multiple. That was less than 10 times. Today, of course, it's more, but they came in with 29% year-over-year revenue, which is really good, beat the street's estimates. On top of that, their operating margins was a bit higher than what the street expected as well. Also, they did increase their guidance. So instead of the street expecting 3% margins, operating margins for the entire year, they're now expecting 5%. That's a big freaking deal, dude, when you're talking about expansion of margins. And then, of course, the RPO, the remaining performance obligations, and everything that's really going to come due in the next 12 months, that grew at a pretty crazy rate. I mean, it was just, you kind of think of when Tesla was down in like the 130s and they had that earnings, and the earnings weren't like amazing, but it just wasn't nearly as bad as the market was pricing in. So the thing pumped up like, 30% that day.
Right.
So it's kind of the same Snowflake, except this time it was actually a lot better than the market expected. So that's why it's up 35% today.
Okay, not bad. That's what we got with Snowflake. All right, so let's get into the thesis right here. A lot of people, when I mean a lot of people, I mean a lot of people have been asking me about this sucker right here that you grabbed, I believe, in the $3 range originally.
Yeah, so
dude, what's the thesis on Grab? You got the floor.
Okay.
Give it to us.
So everyone knows what Uber is, right? Ride hailing business and so on, expanding into delivery and everything. So this really didn't exist in Southeast Asia, Singapore, Thailand, Philippines, Indonesia, all that. It didn't really exist probably in like the last 20 years. And a lot of it was like, just people like kind of like what it was in New York City before Uber started, just like a bunch of random taxi companies, a bunch of freelancers and so on. And then Grab comes over, or Anthony Tan comes over, the CEO of Grab, and he starts this little company. It wasn't actually called Grab before. It was called a different name. Started it out in Singapore, and it was like just a small company, like literally on paper. They're riding down like taxi cab fares, and like they go out, do their job, and they come back, they pay them, get the difference, blah, blah, blah. And then it kind of grew pretty big, but then he scaled it out by building an application that people will be able to communicate and hail rides, kind of like the way Uber does. So over the course of time, it was just continuing to be a ride hailing service. And then Uber started to get into Southeast Asia. So they're growing at a pretty fast rate. They were still private, before the SPACing. And Uber came in, and Uber was bringing them some competition with them. And like, this is Uber. It's like, how scary is it when you're doing really good in your business and all of a sudden big dog Uber comes over and starts to steal a lot of your lunch? You're going to compete hard with them. They went head to head for a little bit. Eventually, Uber decided to sell all of its Southeast Asia operations to Grab. And they also took a 25% stake in Grab. In addition, the current CEO of Uber, he is part of that board. So it is actually in Uber's favor for this company to succeed as much as it is for Anthony Tan. So, go ahead.
Okay, so that's the history around Uber and Grab itself. Now, the stock is up a decent amount over the past couple of months. So, but before we get into the stock, what exactly does Grab currently do right now?
So what Grab currently does is, like, they're originally a ride hailing app that I was telling you about, and they were taking over that business. If you go to Southeast Asia, Singapore, Indonesia, Thailand, Philippines, whatever, like, everyone knows Grab. There's green shirts running around everywhere. Like, that's their motto. Kind of the Uber is the black and white. Grab is just green, right? So they see that everywhere. It has a large following. There's a bit of competition there, but the advantage they have is that they're branching out into other segments, which are growing a lot faster than the ride hailing segment was growing. So they have the delivery segment, which is a food delivery, courier delivery or packages, and also grocery delivery. And grocery delivery is fairly new, probably started in like the last couple of years. And that's growing at a much faster rate with higher retention rates than the food delivery business, which was already doing good. And then on top of that, they open up the financial segment where they're basically giving out loans with deposits and stuff, and also insurance and services, which is actually underwritten by Chubb. So Warren Buffett obviously wants this to succeed as well with their partner with them. And those are growing very fast too. And the thing that happened was that it was a SPAC in 2021, and like the worst possible time you could become a SPAC, right? There were a lot of IPOs that still are not even at their highs today. And, the stock was just demolished the whole time, and they were growing at a very fast clip, but they just were not profitable. They weren't free cash flow positive, and Wall Street just kind of forgot about it, right? So yeah, it was trading down there in a 2-year consolidation period. And then finally, the quarter before last quarter, they actually reported a decent earnings as it was continuing to pick up a little bit of steam. But then Wall Street didn't like the FX currency headwinds that they were having. This is around the time when the US dollar was appreciating a lot. So the Singapore dollar was going down. And a lot of these international companies, they report in two metrics. They report in constant currency and they report in just US dollars. The US dollars figure was a lot lower than what Wall Street expected. They dumped the stock all the way down to sub $4. And around that time was when I started picking up some shares, but it was like around 3.8 when I was like, you know what? You got to put the money where the conviction is. So I
why was it stuck between $2 and $3 for 2 years? Was that interest rates? Like, why was it actually stuck?
It was probably has a lot to do with the fact the US dollar was portraying its dominance over the entire world. Emerging markets were not doing well in general for those couple of years, mostly because when you take a when you take a fiscally tight economy like the US during its rate hike cycle, this actually impacts international and emerging markets a lot more than it does in the US. So just overall, the sentiment is just not good for these types of companies at this time. And of course, when it comes to stocks, price is just it's a product of sentiment and positioning, right? If everyone's shorting the stock, if no one's buying it and sentiment's really bad, it's going to go anywhere. It's not going to go anywhere at all.
Okay. So why did Morgan Stanley say, hey, $8? What are they seeing in this bad boy?
So what they saw last quarter was actually pretty phenomenal. I actually got some notes here I want to go over. So there's more than a few things that happened last quarter. One, they beat on the top line in revenue. They grew, I think it was like about 17%, 20% constant currency. The previous quarter, they're at 14. So they had that reacceleration in growth. On top of that, they're now, this is the second quarter of them being GAAP profitable, but then now they're EBITDA profitable by $90 million. That's a 3 times from a year ago. On top of that, their margins expanded. They're growing a lot. They scaled out a lot. Their CapEx is going up a little bit, but that's as a result of opening up new products and services.
And well, why did this happen this quarter? Yeah. Why did all this growth happen all of a sudden?
In terms of the CapEx?
No, and just in terms of like, why are all these numbers up and to the right as of the past 2 quarters? Are they just getting their shit together? Is that it?
They're just firing on all cylinders, man. I mean, like everything is growing pretty quickly. They're profitable for one thing. They already guided for free cash flow positive last quarter, but then they came in having a second quarter of being positive net income, and now they're talking about being profitable forever. So like, it's kind of like when Palantir did start doing that in May of 2023, when they started becoming profitable and saying they're going to stay profitable, kind of like when SoFi said they're going to stay profitable. When a company goes from being unprofitable to becoming profitable a year ahead of the time frame expected, you better believe Wall Street's going to dive into that.
Okay, so what is your price target, and do you think Grab is going to become an everything app in Southeast Asia?
Actually, it already is an everything app, but they want to portray a lot of dominance in Southeast Asia. And you got to remember, like Southeast Asia emerging markets, their population is growing at a much faster rate than declining population rates in China and the US. So the TAM is just growing as the years go by. But on top of that, there's a huge unpenetrated market for finance, insurance, loans, and deposits when it comes to Grab. Because when it comes to Southeast Asia, because it's like South America, where a lot of people just are not banked out there. So they have that advantage. They have that cultural and friendship with a lot of their clients and so on. Anyways, I don't want to sell like the actual culture of the stock, but more of why is it rallying? It's rallying because Wall Street is starting to see it. They're starting to see its potential. I do think it's still undervalued in terms of its future expected growth. Wall Street thinks it's going to continue. It's going to reaccelerate growth in 2025. So that's always good news. Maintain and grow profitability. And my target, my price target on a like base case, I would say that my price target, depending on today's metrics, as far as growth being constant, as far as profitability being constant, it's going to be at least high 6s by the end of 2025. But my bull case
is $6?
High $6, yes. I'm being like, that is base case. That is being completely realistic, right?
Damn, you're supposed to be getting us excited about this thing. That's a 50 cent.
Hold up, dude. Actually, that's $1. That's nearly a 20% gain.
Right, that is
I don't know if you've taken a look at the options chain, but the 2027 spreads are actually pretty cheap compared to what they're going to be later on. Plus, you have the depreciation
I
factor.
know, but I get that. But just
Yeah.
for people who think at 567, do they see a double in the stock at minimum over the next 2 years, 3 years?
I mean, I don't want to make promises that that's going to happen.
Of course
But
not.
you see
everyone's an adult here. But do you think there's long-term potential for this thing to get to 10, 15 bucks?
So my bull case is by the end of 2025 that this could potentially be in the high sevens. Now that is just according to its fair value on a bull case scenario. If you actually do consider the fact that it is expanding its margins, it is growing very quickly, it's portraying dominance in Southeast Asia, it's expanding the different business segments and growing at exponential rates, you know, Wall Street's not going to give it a fair value. Like,
right.
They're gonna give it a large multiple, and we're below that threshold, right? So if the market stays bullish, this thing could probably double by 2027, dude. Like, I'm not gonna.
Well, that's what I thought. I thought it was reasonable.
I'm not.
In the next
Look,
year.
I'm not. No, it's. I don't want to be someone that's like trying to pump a stock, trying to get people to have these high expectations, think they're going to become millionaires overnight by buying 200 million spreads, going full part and grab. That's not the kind of person I am. That's not the kind of person I want anyone to be who's listening to me, right? I'm being completely realistic. You're supposed to.
I agree with that. My thing is that I also have to remember you bought this thing in the low threes. So for you, 3 to 6 is your double. But for people getting in at 5, if your price target is not 10, it is what it is. But obviously,
that's like saying, like, do you think that Robinhood is going to double from here?
I mean, eventually
by next year.
By next year, no,
eventually.
No. I mean, maybe. But
I mean, well, that's the thing. You know, you there's a risk reward potential. Like if you were on Chris's Discord when I started buying Grab, I was very vocal about it. I was even vocal about it on Twitter. I was very vocal about it. And then Chris finally got in right after the report of the earnings, and there was a potential to buy in the 4.5s.
You're right.
And yes, the thing ran in a very short period of time. Like Chris friggin' went balls deep in this thing. When he told me that, he said he wished he listened to me in the Discord. Now, you know, I'm not gonna like go out there and brag, be like, hey, I got it over here. What I'm saying is that the risk reward potential or the asymmetric reward for this stock right now, for as far as the risk you're putting in for a long period of time, you're gonna make money on it. Like there's a higher potential to make money than to lose money as far as whatever your risk tolerance is.
Yeah, I think we also have to remember Grab is a $20 billion company. It's not like a $2 billion stock with a.
So, I mean, it's got like 1/3 of its market cap on its balance sheet. Like the thing has like $6 billion in cash.
Really?
Oh, yeah. Dude, it has a crazy balance sheet, right? They added $500 million to their balance sheet and they have very little debt in just one freaking quarter, right? And then on top of that, they're only utilizing all of their deposits by loaning them out for that spread. They're only doing 50% of that. So that means that they have another 50% they can loan out to people at a much higher interest than what they're paying people. Like
okay, so last question on Grab, then I want to poke you on some other questions right here. So $6, or let's just call it $6.50. What market cap is that? 35
market
million?
Cap would probably be about no, because it's like about 20 billion right now, so it's probably gonna be like 26 maybe.
Okay, so at a $26 million market cap, my question to you is that expensive when it gets to that 650 range?
That's fair value.
That's fair value.
And that's depending on today's financials. If we take today's financials and we project it, so right now on an EV NTM basis for sales, so again, we're taking the market cap, we're subtracting the amount of cash in the balance sheet, so that's about 14 is enterprise value. We divide that by the next 12 month sales, they're trading at like about 4 times, right? But if you take trailing 12 months, they're trading at about 5 times. So projecting 1 year ahead, if you give it that 20% bump from where it is today to be at that 5 times multiple trailing 12 months, because it'll be trailing in a year, right? Then it'll be trading around 650 or higher. Now that's assuming today's metrics. They're expected to re-accelerate growth next year. Right. And they raise the guidance. And what do you think? They're going to sandbag their guidance? They're sandbagging their guidance, man. They're going to keep on going more and more. And plus, like I said before, this is an emerging markets company. This is a good way to diversify yourself from US equities, which we already know has a premium valuation today. And this is a company that just became profitable, that Wall Street is really starting. Look at the institutional ownership of this stock. Wall Street's buying the stock. If you look at Robinhood, you look at the institutional buys on it, you go to that, I don't know, what's that chart people keep posting about, like Palantir and stuff, like all that institutional ownership stuff. You look at that, also increased as well. Like, it's just, I don't know, man. Like, I can't really, this and Amazon are like my two highest conviction companies right now. I'm not going to lie.
I think it's fair. I think there's a core thesis. I think they're breaking out of a consolidated base. They are profitable. Wall Street loves that. Institutional holdings are up.
What site is this?
Fintel.
Oh, Fintel. Okay. I was wondering what site this is. Yeah. I mean, like Wall Street's also accumulating on it.
Yeah, they're also accumulating. And I think the other thing is that emerging markets, I agree. US obviously trades at a premium. So any level of emerging markets exposure via a good stock, you know, even if it's not an ETF for Singapore or something, but a stock that is ever present in Southeast Asia, I feel like Grab has potential there. I'm still doing more DD on it itself. I bought a little bit of shares, nothing too crazy. Cool. But yeah, I think you have an argument there. So I want to ask you about some other questions. Yeah, about shares, not leaps. But thank you for unloading this thesis. So now whenever anyone asks, we can send them this clip and they can get a little bit of an understanding of Grab. Okay, markets are being really interesting. I want to get your thoughts on a bunch of different stocks. Bitcoin, what's going on with this? And are you long anything crypto related?
So I had hold on. So I had a lot of crypto, a lot of Bitcoin. I was accumulating in the sub 30,000 range a year ago, and I was accumulating Solana in sub 50 range. And I was just adding, you know, continuously as it was going up. And I even added more when we had that recent pullback. And the other day, I sold it all.
At like what, 94, 95?
I sold all my Bitcoin, or the rest of my, actually, I took the Bitcoin and I trimmed it a lot when Coinbase was at 170. And then I bought Coinbase leaps. And then that was my proxy for Bitcoin. And then I added to Solana at that time as well. And then just the other day, I just freaking like sold the spreads. I sold the Solana.
Okay, so you are kind of like, I'm taking my money and you guys can deal with this shit.
No, that's not what I did after that.
What the hell did you do?
Did you do MicroStrategy after? I follow Christopher Patel in Mara.
Okay.
And I got those spreads that he was talking about when it was sub 19 the other day. And
the spread should be up right now, so that's good.
They're very much up. They're very much up. So what am I doing now? I mean, those expire in 2027, dude. So I'm just chilling. Like I'm not trying to, like I've locked in almost all of my gains. So the Mara is basically a free ride for me. And I'm just gonna let it run. Like I'm not gonna
okay, so let's talk about this. Before we get into Mara, what is your opinion on what Mr. Michael Saylor is doing?
I mean, you know, you make a lot of money on the way up, and then it's going to blow up in your face. It's going to blow up in his face at some point, but I don't think that time is now. I think a lot of what's happening right now is probably a FUD, especially with Citron. I mean, how many times has Citron put out a short report in a stock, and then the stock ends up a lot higher a year later? Like freaking Square, they did a short report on. Actually, no, was it Hindenburg or Citron? I don't know, whatever.
Yeah, Hindenburg.
Dude, when these guys run out with short reports, you know they got a short position on there. And then as soon as it comes out, they see it drop, and you know they take their profits. That's what Muddy Waters does. That's what Citron does. That's what Hindenburg. This is what all these guys do. And they got their buddies and their friends taking place with them, man. It's a freaking game. Like it is totally a game.
But do you think what he's doing by getting cheap debt and collateralizing the stock is a smart thing?
Yeah, I think the guy is a freaking genius. Like he figured out a way to hack the system, and he's fucking hacking it. Like that's what he's doing.
Okay, so why buy Marathon then over MicroStrategy?
Well, okay, so Marathon has been a miner for some time, and probably starting like around last August, they started taking a lot of the convertible notes they've been doing. They've been buying Bitcoin with it as part of its reserves, and they're already mining the crypto, right? So as far as a miner goes, their job is to create Bitcoin or mine Bitcoin and then sell the Bitcoin in the open market when Bitcoin is rising a lot, and then use those proceeds to fund its operations. But Mara is one of the successful Bitcoin miners. So they are able to fund their operations, and they're using the extra proceeds, including the additional convertible notes they opened recently, to purchase more Bitcoin. So in a way, they are starting to do what Michael Saylor is doing, but not at his scale, where there is no underlying operations for the company that is somewhat tied with Bitcoin. Like MicroStrategy's application has nothing to do with Bitcoin, obviously. Mara is a miner, so it is going to make a lot of money as it continues to sell Bitcoin to fund its operations as Bitcoin does go up. But on top of that, you have the additional leverage where they're purchasing Bitcoin onto its balance sheet.
Do you think Bitcoin gets to 120, 150? Kind of what's your personal?
I think it's going to go way beyond that, man. I don't. I'm not in the habit of calling tops on crypto and acting on it. I am in the habit of just guessing what the top is, just for fun. Like I thought, freaking last night I released a tweet, was like, "Oh, 97 is a local top," and like literally 10 minutes later I was at 98. I'm like, well, then that didn't take long to call me, but I'm just doing it for a joke. Freaking Wall Street, a lot of people in Wall Street are doing it because it's like they hate the fact that it's running without them, that they're willing to short it, right? So this is like constant short squeeze and short squeeze. And the skepticism that you see on Twitter is a very good sign that this is probably not going to end anytime soon. And then on top of that, you already got the tailwinds with what Trump is doing, adding it to the reserves. You already have the Doge committee. I don't know. When I read that, I was like, oh, he's like sponsoring the US with an altcoin. Like why do they call it Doge? It's just exposure at this point, right? Doge is up 300% in like the last couple of months just because of this, right? So honestly, I think it's got a lot more to run. Where's the target? I don't know, dude. 250. I don't know. What does that rainbow say? 250?
Yeah, it might be around that 250 range. So you've been bullish on crypto for a while. You believe that the negative sentiment by people wanting to call it top is bullish, and you also think that the institutionalization of the asset class, because Wall Street doesn't like something running without it. We've seen that with Palantir, right? They just come in whenever.
Exactly. Yeah.
You think that's a tailwind for crypto?
That's a tailwind. And also, if you really think about it, the fact that the US is saying that they're going to start adding it to the reserves, or Trump is saying that he's going to do that. I mean, who knows if they're actually going to do it? Gary Gensler is gone, so the regulations on it are going to be taken off of crypto, likely to be replaced by someone who is pro crypto. And then on top of that, I mean, you've seen a lot of hedge fund managers and even BlackRock, they're adding to its balance sheet. Like, they're never going to sell. Like, when is BlackRock's not going to sell their Bitcoin? They don't sell anything. They just keep it on their balance sheet, right? A lot of these companies do that. So they're actually, I would say the higher that Bitcoin goes, the less volatile it gets. Ironically, that's what's happening because these companies are not selling it. It's like kind of like the index funds, right? You have S&P 500, 401ks are buying into it, retirement plans are buying into it, and people are just buying into it and forgetting about it, right? And as this happens, the volatility of the index on a much larger scale is actually shrinking, but the appreciation of the S&P 500 value is increasing. So if you think about it, if we had a 5%, if we had a 2% down day on the S&P 500 today, that would be down like what, 100 points on the S&P 500?
Roundabout, yeah.
So like 30 years ago, when S&P 500 was like around, I don't know, less than 1,000. If you had a 100-point down day, then that would be like anarchy. That'd be like Black Tuesday. Yeah, they'd be like Black Tuesday. But the reason why it didn't go down that much back then is because the volatility was not as high at that time. So if that volatility does increase because of its price, but it gets suppressed because of the amount of institutional money that's not selling goes into it, it in a way decreases volatility as it goes up. So then that way the price kind of creates a floor. And this is the reason why it's not common that you see the S&P 500 go down like 20% over the course of 3 years because of these index funds buying into it. I'm sorry, because of these institutions buying into it all the time with retirement money, with low risk institutions, and so on.
I 1000% agree with that. There's a big psychological barrier that is crossed as a asset is normalized and institutionalized. And ironically, as you said, it's a great point. When Bitcoin goes higher, the volatility theoretically gets lower. And once you normalize 100,000 and people are like, yeah, it's 100,000. That it is what it is, right? And people they're not afraid of it going down 50%, which it could happen. You get a lot of new inflows coming in and a lot of people that are like, all right, now it's almost like when a penny stock, like SoFi, it was $5. No one wanted it, gets to 15. It's like, oh yeah, SoFi, I'll buy it at 15. I think we're going to see a lot of that with Bitcoin, with IBIT, et cetera. And that's not.
Yeah. I mean, if you really think about it, like, do you think SoFi is going to go below $8 again without any type of crash or market stays bullish and so on? Like, do you really think that's going to happen at this point with the amount of flows that's going into it and the amount of institutional ownership that's going into it? I'm not saying that it can't. I'm just saying the likelihood that that's going to happen without the market crashing is pretty low.
Right. It's going to be very, very difficult for that to happen. Okay. So I want to get your thoughts on two other stocks that I know you're big on. and I want to get your overarching take. We do have some breaking news on one of them, which is Google. Let's listen to that real quick, and then we'll talk about Google.
Browser. This is according to a report just out.
We have a news alert on OpenAI. Steve Kovac has the story. Steve.
Hey there, Morgan. Yeah, OpenAI is considering making a web browser. This is according to a report just out in the information. This is just part of a cascading series of products that we've been seeing from OpenAI. They announced their search product just a couple weeks ago. That's starting to roll out. Obviously going head to head here with Google on that front. And by the way, this is coming just 24 hours or less than 24 hours rather, that the Department of Justice recommended that Google has to spin off of its Chrome browser in order to satisfy remedies for the antitrust case it lost. And also that could be, of course, a threat to its search business as well. We see Google shares down about 1% here after hours.
So OpenAI is going after the browser. Google put out this press release today, or this blog post, saying that the getting rid of Chrome would be horrible. What are your thoughts on the breakup, and is Google a buy at these levels?
Jeez, I don't know. I feel like when we were doing the tech talks on Twitter, like it's just, I don't know, man. I'm not buying Google. Like, I'm sorry. If it comes to any Mag 7 that I'm buying today and that I do own today, it is Nvidia and it is Amazon. I don't know enough about Google at this point. Yes, I mean, I think a lot of this is really FUD and fear that Google's not going to make it and so on. But they're a lot more than a Chrome browser. They're more of an advertising company and social and they got the YouTube.
Cloud. They've grown 35% cloud.
Well, I mean, that's going to grow, but that isn't so big that it's going to make a material difference to be able to prop up their top line of cash flows at this moment. It is a high margin business, but without a doubt, that's going to scale out. But what I'm saying is that, like, it's hard for me to create a buy thesis for Google at this point with how much negativity it is, with how much room there is for competition to grow with it. It's very tough. Like, it's not.
Do you have Google right now, or you're out of it?
No, I don't. I just have Amazon Nvidia for mega cap.
So you got out of Google. You think the DOJ thing is
Well,
actually?
I never really had a huge Google position. I think I did before with the spreads, but I got out of those. I think I made a little bit of money on it, but there was a point when I was just all in Amazon Nvidia, and that was it.
Okay, so let's talk about a company that I do want to start DCing into next year. You think this is? I think you think this is like the best company in the world, right?
This is probably hands down going to be the biggest company in the world on a consistent basis, right? Like right now.
So you think Amazon can be bigger than Tesla in 10 years?
Yeah. I think Amazon is going to consistently be the biggest company in the world. They have so many verticals, dude. They have, first of all, their largest gross margin segments is AWS, and it is advertising. They grew at about 19% to 20% last quarter. Again, these are very high margin businesses, around 80% gross margins. And on top of that, they re-accelerated those two branches. On top of that, they have their e-commerce business on an international scale, which is actually profitable now. So they have that going for them. And they're actually expanding. And they've said this on the call. Jassy said this on the call, that they are looking to further expand into more emerging markets in Europe and in Asia, right? I do think that emerging markets is going to make a huge move in the next 10 years, probably something that a lot of people are not expecting, since emerging markets as a whole has been underperforming US equities for a while. But with the loosening monetary environments coming up, with the dollar depreciating, you're going to get that big bump in emerging markets. They're in that too. And then on top of that, I mean, like, they're the largest cloud giant in the entire world, right? And cloud penetration is like around 90% untapped. And you're never going to tap the whole 100%, but at the same time, if they get like another 10%, you're talking about double the growth rate, or you're talking about double the revenue, right? Like, they're not going to lose that much market share to these guys. They're going to still maintain the lead. They're the freaking leader. They're partnering with Snowflake. They're partnering with OpenAI. They're partnering with all these people. Maybe not OpenAI, maybe Anthropic. But anyways, like, it's just, how can you be bearish this company, or how can you not think this company is going to be the biggest company in the entire world? Maybe it might be Tesla.
So yeah, hold on. We have John McCain right here, who has in all caps, which means he's a little upset. But why Amazon so down then? So why is Amazon below 200?
FUD? I don't know. I mean, like, honestly, you know what? I take it back. There's two things. One, what did you see rally today as far as the industry goes? You saw IWM rally. And then you saw mega caps pretty much flat to down today, right? Especially Google. Google was down a lot. I think the narrative really follows a price action, right? lately, if you take the ratio of IGV over the QQQ, and even if you take IWM over QQQ, the IWM has actually been outperforming the Qs for probably on a 2-month rolling basis. It's been outperforming it, right? And the same thing with software stocks or IGV ETF. The fact that you see that means that there's money flowing more into software and small caps than there is flowing into QQQ, which is heavily weighted the market caps. So this price action you're seeing today is a product of that, but the news that you see that follows it is just a narrative. So it was an excuse to take money out and put it into the small caps. You don't need to take that much money out of these mega caps to make the small caps rise like 10%. You don't.
I agree. Do you think their operating margins are going to close in on 15% in the next couple of years?
In the next few years, I think their operating margins can, well, the AWS operating margins it did beat expectations. Instead of 31%, it was 38.5. And I think that that's going to expand according to Jassy's commentary in the call. Like he said that there is room for that operating margin to grow. The CapEx is at its like peak right now. And then it's probably going to start going down maybe like late 2025, 2026, fiscal year 2025, 2026. And that will, of course, will contribute to margin expansion. But Amazon, they go through these investment cycles. So like it'll probably go up, then come down, go back up, come down. But if you take a look at their free cash flow, like that is what you need to price Amazon with based on their free cash flow margins. That is expanding still. So, I mean, operating margins, cool, but free cash flow margin is really what you need to look at when it comes to this company.
So tell me, what is the Amazon AI thesis? Like, is it AI workloads in the cloud? Is it LLMs when you're searching stuff? What is their ROI on AI over the next 10 years?
So they're already utilizing it. I mean, the Jassy already said they're expanding triple digits on AI workloads in AWS and also AI features and products. I don't know exactly what they categorize that, but I'm pretty sure it's like machine learning, whether that's Amazon Bedrock or any products that do rely on that. Bedrock is basically like their AI layer in Amazon. Everything is really based on that. And then also they're implementing Rufus. You ever see Rufus in the Amazon app?
Yes.
Honestly, that works pretty good. Like, I'm not gonna lie, it works pretty good. And then it connects you pretty well. Like, their app is just phenomenal and they renovate this thing all the time. So like they kind of embed AI mostly into its operations as far as how the software works on its own. So there might not be like someone in Amazon marketplace saying like, I want to buy AI here, but their shopping experience and this was logistics is actually improved based on the capability of the skills that they're adding on there. On top of that, dude, we have not factored in robotics for Amazon. Like, can you just imagine like a fully robotic warehouse? Take a look at the company SIM.
Oh,
They're a company. Yeah, Symbiotic. Yeah, they're a company that makes that converts warehouses to a fully robotic infrastructure, right? They do it for Walmart is one of their biggest clients. They get a freaking backlog that's multiple times their market cap. This thing was trading down to like the 20s, and everyone thought this company was done. I wish I freaking bought a position in them. I wish I did when they were down in their 20s, but I didn't. You can't catch them all. But like, dude, this is the freaking future. Amazon is already doing this. Right now, they're like at about 10 or 15% robotic utilization in their warehouses. Imagine when this thing goes up to like 50, 60%. Like, they're like, go ahead, deport them all. We don't need them. We're going to do these warehouses. I'm not saying I'm not siding with that.
It was an ill-timed joke, but I get it.
I'm sorry, guys. It was a joke. Like, I'm not first generation. I'm second generation. So like, I feel you guys, but I mean, like, can you just imagine just the potential that they're going to do on the scale? And dude, this is the reason why I'm so bullish Mercado Libre, like so freaking bullish.
Okay. So give me a little thesis on this. This is what Amazon of Latin America.
It's the Amazon of Latin America minus AWS, right? In fact, well, actually they're hosted on AWS. So technically it is AWS. But they just went on a massive CapEx cycle where they improved the logistics just like Amazon did in 2020, 2021. And people were it is the same playbook verbatim to what Jassy did with Amazon in 2020 and 2021. And they're going to come out on top, but like the market doesn't freaking believe them at first. And then they're going to come back. Like it is Adrix got it too. Nubank too. Nubank, man. Seriously.
So let me ask you another question about Amazon. Why is Bezos selling so much?
Wants to buy a yacht? I don't know. No freaking clue. Maybe he wants to do that New Origin thing, or maybe he's working on that Project Kuiper, the one where he's competing against SpaceX with the satellites. I don't know, man. Like,
you don't think it matters at the end of the day?
No, No, man. Like this is the reason why when it comes to the whole carp thing with Palantir selling, yeah, he sold a lot, fine. But like, I don't think that's like the bear thesis for Palantir. It's so, this is what people do. They take something, they grab onto a theory, they attach themselves to it, and they say, this is the reason why it's down. But honestly, it's just going to be the price is going to be the narrative following the price. I mean, yeah. Oh, expensive girlfriend. Maybe. I mean, like we're all going to be sitting here guessing, but CEOs do this all the time, whether it's at a big pace or it's not.
Is Amazon going to destroy HIMS?
No.
Okay, so you're bullish
No.
Amazon, but you're bullish.
I'm
HIMS,
I am a big bull on HIMS, but I don't have like a ginormous position. But I mean,
so why are the bears of HIMS wrong? Because all of them last week said Amazon's killing it. Why are they wrong on that?
Because I mean, they're just going to be wrong for a long time. I mean, like this is the bear thesis that builds up, and it's great. I love bear thesis because one, it challenges us to assess why we're in a stock and our bullish thesis for a stock to be kind of open-minded to understand, what the risks are in a company. It helps us understand that. But if the bullishness you have in the thesis you have in a stock overcomes that, then you adjust the amount of money you're putting in this company to adjust to the risk tolerance you want, keeping those risks in mind. However, the opportunity that sometimes, like, look at this thing oscillates up and down. But if you look at the long-term trend, it's going up, right? So this is just
why won't Amazon take their lunch if they're going to do the same thing?
I don't think they're going to take their lunch. I think there's just enough lunch for everyone to eat.
Yeah,
so
I think the market is growing rapidly. Amazon's going to have some of it. HIMS is
exactly. How like everyone, I don't know, man. Like you're Indian, so if you're like grandpa wants to go or if your mom wants to go to the hospital, like is she going on like Amazon.com and signing up for like a virtual meeting with the doctor and getting a prescription? Like she's probably not doing that right now. Like everyone I know is old school. They go to the doctor. Even I go to the doctor, right? But at some point it's going to happen. Like no one thought EVs was going to be a thing 10 years ago. And then look at it today. Like this is just the way of the world, man. It's just going to happen.
All right.
Also, did you see HIMS rally like 8% intraday today?
It was 10%, 10.83%.
Yeah. Intraday, it rallied like 8% on the back of the FDA pushing their decision date back to December 19, I believe. And I mean, I don't know, man. Maybe they just bought the stock. It's a $5 billion company. So like any hedge fund or a couple of hedge funds can just make this thing rally if they feel
around with it. Right.
Yeah, they can do whatever they want.
You also have, so what are your top 3 holdings in your portfolio right now?
Amazon, Grab, and right now,
is it NVIDIA?
NVIDIA, yeah. The thing is, NVIDIA has appreciated so much that the cost in that was actually pretty low. Snowflake is pretty up there, but Mar is a pretty decent size one, only because it appreciated so quickly.
Okay,
but so I actually have like, yeah.
The reason I asked that question is because I thought it was NVIDIA. So what was your reaction, and we'll end off on this, on NVIDIA earnings?
I mean, it was just they performed as expected. And Wall Street is looking for like some sort of outsized performance and guidance on their company. And like they already had their massive growth cycle. But I totally think that today their price is actually pretty justified considering what's going to happen in the future. But that's the problem. It is priced for the future already today. But I mean, they're the narrative for the AI thing. Like NVIDIA is just America at this point. So if you're going to short NVIDIA, you're pretty much shorting AI technology and America.
Okay.
It's hard not to. It's hard not to be bullish this. So I mean, it really doesn't take that much of capital to be able to see this thing grow and appreciate on it. So somebody 102.91234 Snow reaching. I think Snow is going to reach 200 probably early next year.
So let's do this. Let's do a 2-minute segment. We'll end it off on this. Sam, thank you for being here. If you guys liked Sam, put a W in the chat. We'll have Sam on more often, and we'll try to get him on either every week or every other week. I'm going to name a stock. You tell me bullish or bearish, and then like a 1 or 2 sentence thesis, and we'll get like 10, 15 stocks in there.
Go.
All right, ready? Celsius.
Bearish.
Okay, why? You got to give one reason why.
It was a fad. It's going to stick around, but like its growth is not going to be there anymore. It was priced to, I think the fair value maybe is like a little bit of appreciation here, but I think that there's a lot better opportunity in the market to be putting money in there.
All right, we'll move on. You be real quick and we'll move on.
Go.
Celsius bearish. SoFi.
Bullish.
And then one sentence.
Long term.
You don't got to explain yourself too much. It's bullish or bearish, one sentence.
Okay, so long-term bullish. Is it going to be a 20 anytime soon? I don't know, man. You're really pricing a lot of the future very quickly, but there's a lot I don't know about it. So yeah, it'll probably go up.
Tesla.
Oh, bullish AF, man. Bullish Tesla.
Oklo.
Bearish. This
Salesforce.
thing pre-sales. Salesforce bullish. Cloud.
What was the other stock I had right here? Well, maybe you know this, maybe you don't. William Simona.
The furniture.
Yes. It was up
Furniture
20%
store?
yesterday. Yes.
I don't know.
Okay, I just want to see if you knew that one.
Bearish. Like I don't know. Nah,
Okay.
There's a William Sonoma here. It's like I don't know.
Okay, so you know, I didn't even know the story. Apple.
Bullish.
Cheesecake Factory.
Bullish.
GameStop.
Bearish.
Enphase.
Bullish.
PayPal.
Bullish.
Elf Beauty.
Bullish.
Uber.
Bullish.
Dell.
Super bullish.
SMCI.
Bullish.
Target after going down 20%.
Oh God, I'm sorry. I gotta be bearish Target.
Okay, AMD.
Bullish.
Okay, McDonald's.
Bullish. Bullish E. coli.
Archer Aviation.
I never heard about that one. I saw you mentioned that the other day. I have no idea.
Walgreens.
Bearish. They're done.
Wow. Okay, Matt's not gonna be happy about that one. Sorry, Matt. Last one. Think before you answer this, and you can explain your logic from this valuation. Palantir.
You know what? I've thought about it. I did try to short it recently. I made a little bit of money, but I got out because I'm scared, dude. I'm scared. I don't know. If market stays bullish, like this thing's gonna keep going up. I'm sorry. Like it's just there's too much bearishness on it right now for me to stay in something like that. So yeah, I'm bullish.
Okay.
I actually did say a bearish case, but like my thing is if the market rolls over, this is gonna get hit, right? But the market doesn't look like it's rolling over anytime soon. And I thought it would, but it just didn't.
Well, that's the thing. So Popcorn Panda says he's bullish on everything. That's because we're in a bull market. And
Yeah, we're in a bull market.
It's hard not
I didn't say bullish Walgreens. I didn't say bullish Walgreens. I didn't say bullish Target. I'm bullish.
Two more.
Yeah,
Meta.
Oh, I'm bullish Meta. Meta's good.
Okay, and then Robinhood.
Oh, man, I wish I got in. I wish I stayed in. I mean, I didn't have a big position, but bullish, super bullish Robinhood. That company's crazy. They're doing some crazy stuff.
Yeah, I agree. I think they are executing pretty hard. And I guess, your top three positions, Amazon, Nvidia, and
yeah. I mean, if you want to ask me, dude, I'm building a cash position. Like I'm not messing around. I'm like 10% cash and I have no problem taking some off the top as this thing keeps going up and, just stashing it away.
Yeah, I think that's fair. Amazon, Nvidia, and what was the other one? That was your top three?
I keep forgetting. Like it's kind of like a competition between Grab, Mara, and Snowflake.
So let's just do five. So your portfolio going into 2025 is Amazon, Nvidia, Grab, Snowflake, Mara. So you got Amazon with big tech, you got Snowflake recovering in software, you got Nvidia with AI, Marathon on Bitcoin, and then Grab with emerging markets. I think that's fair.
Looking at my portfolio. Like I have other positions too, but I'm looking like I'm trimming GitLab, I'm trimming CrowdStrike, I'm trimming Rubrik. Those are big things that like almost made a double since I bought them. And I just, I want to concentrate my portfolio because I can't keep an eye on top of this stuff. Like if I was too diversified as I used to be with like over 20 positions, I wouldn't be able to go hard with Grab and I wouldn't be able to go hard with Mara, Amazon and stuff. Like I feel more comfortable being more concentrated with like under 10 stocks than having like freaking 21 need to keep an eye on.
I agree. I mean, this whole year I've been in two positions, right? Palantir and Hood. So consolidation sometimes really does help for the.
And you're doing great, dude. You're doing amazing.
They've been doing good. And next year, the goal is to diversify into other names. But I do agree that having a little cash right now is good going into 2025. Oh, wait. So here's my actual last question. Sam, you're such a good guest. Everyone loves you. You got a bunch of W's here. So we will definitely try to have you on every week. Do you think 2025 is going to be a replication of 2024? Maybe 7,000 on the S&P? What do you think we're looking at?
I gotta be honest. I think that the world is in for a massive regime change in 2025. I don't think it's like David Hunter status where the market's gonna be down like 80%. But I think what was it, Goldman Sachs? I forget it was Goldman Sachs. They said that there's gonna be an average of 3% returns over the next 3 years. And SP 500, I think they're right, dude. I think they're right. I think there's
you're bearish 2025 a little bit.
Somewhat. Yeah, I think there's going to be try to look up the word fourth turning. I think the fourth turning is coming, where the world is going to be a lot different a year from now than it is today, and I want to be positioned at a point where I'm diversified across the entire world, and that my risk volatility in my portfolio is low, and I have a good amount of cash and high paying dividend stuff.
All right, I love it. Sam Solid, there is his Twitter in the chat, folks. I'll be talking to Sam again at 6 p.m. on Twitter Spaces, so you guys can tune in there. But I love it, Sam. Thank you so much. We'll have you on probably next week or the week after that.
Awesome, dude. Thanks a lot. Appreciate it.
Appreciate it, man. Talk later.
Later.
Okay, cool. There you go. Some good perspectives from Sam around Grab, NVIDIA, Amazon, Google, all that good stuff. And yeah, Sam is awesome. I've known Sam for a while, but we don't have him on the show too often. But I think this kind of Grab thesis was a good excuse to have him on again, and we will have him on earlier in the future. All right, so we're going to end off the show today, guys, with one clip. This is one clip. Some of you guys might have watched this, some of you guys might have not, but this is the clip I wanted to take a look at. This is Brad Gerstner talking about NVIDIA and his overall thoughts on what's currently going on in the market. And we'll take a look at this, and then we'll be out of here for today. Money market funds, 22 billion outflows, not too bad. Overall stocks, the biggest mover we had after hours was MicroStrategy, really into the close, down 16%, but now it's up 5%. I mean, if you're into MicroStrategy, you might as well get a tattoo of the word volatility. I mean, this is what you're signing up for. So MicroStrategy right there, up 5.2%. SMCI, big day, up 15%. Target, not really recovering, kind of flat on the day. IWM, small caps, had a great day. S&P was good. Qs were okay. SoFi closed above 15 was great. Palantir holding above 60 is an absolutely incredible at 61. You had Hood, took it on the chin today, down at 35.09, 35.37 after hours. And then you have BTC doing its thing at 97,000. Maybe 100,000 is tonight. Maybe 100,000 is tonight. We are going to see if that ends up playing out. All right, cool. Let's take a look at this one last clip, and then we will be done for today, and we'll be back tomorrow on the market open. Also, Daily Palantir episode in about 2 hours. It'll be talking about the relationship between Doge, this new commission thing with Elon and Vivek, and Palantir, what it means. We'll go through that and a bunch of other Palantir updates, so that'll be out in a couple hours.
Sales up 94% year on year. That is a slowdown from the prior 3 quarters, which have just been astounding, and 94% up year over year is amazing, obviously, but what's your take?
I mean, let's say at the start, it's down a little bit today because expectations were sky high. But this was a blockbuster quarter by NVIDIA, right? What's clear to me now, and what I think the biggest takeaway from the call, is that the world runs on NVIDIA. As Jensen said, AI is in full swing. He said this is a multi-year event. This is not just about training AI. This is about moving all the world's x86 architecture. All the applications that run on CPUs are going to be rebuilt over the course of the next 3 or 4 years on GPUs that are running machine learning. So I think that the market is going to have to digest that this just isn't about training clusters in 2025. This is about GPU data centers that are going to be built in 26, in 27. And so for us, our numbers came up. You saw that I think 10 sell-side analysts took up their price targets for the stock. We were buying it pre-market when it was down.
Oh, you're
today.
buying it this morning.
Yeah. So, I think it was a blockbuster report. And I think, it's clear to me that the Intels of the world are going to continue to lose share, and the NVIDIAs of the world are going to continue to gain share. And if you want to bet on the tailwinds associated with AI, you have to have NVIDIA in your portfolio.
Okay, so it's now your number 2 position.
Correct.
With buying a little bit more this morning. Josh, what was your take on the quarter? You obviously well known for being in this stock for a very long period of time.
I think they were very artful in the way they maintained everyone's enthusiasm for the potential for Blackwell, where orders stand, the fact that demand is still outstripping supply, but they didn't ratchet up the excitement too much to put them into a position where they just can't win the next time they report. And that's really going to
AKA they're sandbagging because they kind of have to.
Be the company's job going forward. It is already the largest market cap company in the world. it is already the most must-own stock in the world. There is no need to continue to put pressure on themselves to outperform and outperform and outperform. So it's harder than it sounds because they do have a really bright future, and the revolution is real, and the dominance of GPUs and data centers going forward is undeniable, and their market share position within that revolution is also undeniable. So they have to now do this quarter after quarter, give people realistic guidance, execute, ship products, hit those numbers, but not paint themselves into a corner that they can't escape from, where the market expects them to double revenue every year, which of course, like mathematically will be impossible. So far, so good. I think Jensen understands the mission. I think he's accepted the mission, and I liked everything I heard last night. The most important thing, and I'd love to hear Brad react to this, is this idea of the moat, because competitors are coming in with new solutions. Amazon is ramping up production of their own Trainium 2 chips. Like, they will not have the whole markets themselves forever, but they can maintain dominance, and it might actually be a good thing for the ecosystem for there to be more products out there. I think that's the tone that was set last night, and I think other NVIDIA longs heard the same thing that I heard.
What do you think? I mean, that's all about the idea of the installed base. And we've heard Jensen talk about that before, almost in the same way. And I think I've mentioned this in the past, of thinking about that in the same regard as we do Apple with its own sort of powerful installed base.
Yeah, I mean, listen, the stock started the year at $49 a share, $50 a share. Today we're at $145 or something. The asymmetry is closed, and part of the reason for that is everybody had this wall of worry, right? Custom ASICs, Amazon's going to have their own Trainium chip. I said on our recent BG2 podcast, of course they're going to use Trainium. It's a cheaper price solution for certain customers, but they also, Jassy has said he's going to buy as much NVIDIA as he can get his hands on for as far as the eye can see. They know the world runs on NVIDIA. So, listen, when we look at our price target for NVIDIA next year, it's up 30%, not up 100% like it was at the start of 2023 or at the start of 2024. So when you ask me as a portfolio manager, we took down the size of our position. It was a really outlier position for us to start the year. It was a normal size position for us coming into this quarter, and we're adding a little on the pullback in this quarter, but we think it's going to be a great compounder and a great bet on not only AI, but also on the replacement, the move from x86 to GPU-based data centers for the next several years.
Okay, Bryn, what about you? You've been a holder of this stock for a long time too.
Yeah, I mean, I think what's so amazing, and you talked about this moat, and what this means for the AMDs of the world, et cetera, is Jensen walked through how 64 Blackwell GPUs can run GPT-3 compared to 256 H200s. So they're even making chips, the Blackwell, which is not a chip, they're making these GPUs that are cannibalizing their own products. And this is why they are so hard to compete with, is they just continue to innovate so quickly. And then when he talks about how Oracle is announced this Zetascale, whatever that is, AI cloud cluster, that can handle over 130,000, Blackwell GPUs. And so I think when Brad talks about this shift going from modernizing from CPUs to GPUs, I don't think we are really great about understanding. Jensen thinks it's $1 trillion over the next 10 years. I mean, the difference between a billion and a trillion, a billion seconds is 32 years, a trillion seconds is 32,000 years. I think we are still early in this, and this moat is going to last for a very long time. But I do think there are going to be big winners and big losers. And right now, NVIDIA is the winner of the bunch.
And Liz, I mean, obviously the market's still trying to digest it. If there was any bit of, I don't even want to use the word disappointment. I mean, there's just so much to live up to. As we said, we had 11 or 12 price target increases on the name. I only see one firm talking about their guidance being below what they would suggest is the bull case. I mean, as you watch the market here react to it, what do you think?
Well, I think the most important points that have been made so far are that expectations were so high. Brad said that at the beginning of the show. And then Josh about making sure that they can set realistic expectations going forward. This market is hard to impress on stock price action. I mean, we're talking about situations where you've got beats and raises being punished in the stock price. So first of all, I think we're still in the infancy of this AI theme. We're going to be in the infancy of it for a little while yet. But as it matures, what we're going to find out is whether or not the companies that have been the winners so far can continue to win along that vein. And then who are the other ones that will come in, and even the other industry groups that will come in. And something that's been really interesting to me in the last month or so is just the performance of software. And I think some of that has to do with the fact that, okay, we've established that this thesis will continue going forward with AI. What else can companies start to spend on? Where can they actually find the profit? And who are the companies that are going to help them create that profit? And I think software is a big group that's going to benefit from that going forward.
All right. So we got a lot of perspectives, all of them pretty bullish NVIDIA. I would have to agree. Jose was bullish yesterday. Sam was bullish today. I mean, you got the analyst community bullish. It's hard to not be bullish on those numbers. And the PE just went from 70 to 50. And if it goes back down to 138, we might get a PE into the mid 40s, which given their growth, I think is not going to be too bad. Gap had earnings today. I don't even know this company had earnings today, but Gap Inc., they sell clothes. Not as expensive as Williams-Sonoma, but they do indeed sell clothes. 73 cents versus 58 cents. That's a beat. 3.82 billion versus 3.81 billion. That's a beat. You know what I would go short on after seeing these earnings? I'm not really going to do it, but philosophically, what I would go short on is Target, because Target said that their apparel sales were down. Why are people going to Gap over Target to buy clothes? I mean, Gap is an $8 billion company. Target is a $50 billion company, and Target's a much, much, much better household name of a brand, has much more locations than Gap. This is a Target issue. This is a Target issue. Target has some stuff going on. They should not be losing business to Gap. I know Gap specializes in apparel and Target's more mainstream around other items. But if Target said, hey, it's going to get cold, expect a tailwind in our earnings next quarter because of cold weather, that means they're using apparel as like the scapegoat of why they sucked this quarter. And realistically, that seems like it's not the reason. It seems like they've got other stuff going on because Gap is beating them right here, up 16%. It also shows the consumer still has money. And Target didn't blame the consumer, to their credit. So they're being big boys here. They're saying it's not the consumer. But if the consumer does have money and they're spending in places like Gap, then that means hopefully the economy currently is a bit more healthier than what people might have thought. Archer after hours. Archer did have a good day. Yeah, Archer up 14%. I think in the morning it was up 10%. Now up 14%. Archer did get upgraded the other day to $11. So you got Archer right here up 14% currently right now. Christian, thank you for the $10 super chat. Target is too expensive and Walmart has Walmart Plus, which I just get my food delivered. I didn't even think Target has that. I didn't even know Walmart has Walmart Plus. I mean, I think I heard about that, but I didn't know they deliver food. Interesting. Oh, well, yeah. I mean, look, that's more expansions than Target. And then obviously, yes, Archer is on a tear. Now, Reddit, folks, I think the reason it was up today, outside of the upgrade, is potentially something with Google led people to think, all right, we should buy Reddit based on the whole Chrome stuff. But now that OpenAI after hours says they're trying to compete with Chrome, that's bad for Reddit. Why? Because every search on Google, I heard some insane stat, I'm probably getting it wrong, but it's like 1 out of every 5 searches leads you to a Reddit link on Google. Like the amount of traffic we get from Google is insane. Now, I don't think that has to change if ChatGPT creates a browser. Granted, maybe that browser just gives you the answer versus giving you a Reddit link. So that could be bad for them. And that's why I think the stock's down 6% right here. But Reddit is down on that news as OpenAI is now trying to compete with Google. Google right here after hours down another 0.8% after going down 4.5% on the day. All right. There we go, folks. We will be back tomorrow morning, ending out the week. It's Friday, dude. Tomorrow morning's Friday. That's kind of crazy, right? That was a quick week. I feel like that was a quick week. Why is Amazon down today? I have no idea. I think that's just big tech getting a little sold off and Amazon getting sold off with it. What's up in Mar-a-Lago ambulance? I heard some reports that ambulances in Mar-a-Lago. I think we're waiting for some actual news companies to like report on that. Around ambulance in Mar-a-Lago. I don't think it's mainstream yet, and I don't know how accurate those reports are. But yes, there are some people saying there's ambulances in Mar-a-Lago, but I think we have to like wait until we get some accurate sources reporting on that right now. But I'll be on Twitter, so if you guys follow me on Twitter, I will report on it once we get some actual numbers. Fake news, yeah, I like there's no real news. I see some tweets about it, but there's no actual like news about what's happening. So Not fully sure if that's confirmed yet. All right. That's it. Thank you, everybody, for being here. Don't forget, OpenAI has a partnership with Reddit. That is also true. Maybe there's a collaboration there, and the street's kind of prematurely thinking that would be bad for Reddit, when in reality, it might end up being good for them if OpenAI does have a new browser to compete with Google. All right. Thank you, everybody. Appreciate it. We'll be back tomorrow morning. I will be here with TJ. We will discuss options, selling options, all that good stuff. Look at the public portfolio. And yeah, we will keep going from there. Thank you, everybody, for joining. Thank you for the 12,000 people who joined yesterday. That was really awesome. I think that's the most we ever had on a stream. Jose at 6,000 people. That's the most he ever had on a stream as well. So super, super cool, super awesome. Thank you, everybody, every single day for joining in the morning. I think we're getting close to that 2,900, 3,000 every morning, which is really, really cool. In January, it was like 600, 800. So been some good growth this year, and hopefully it continues to be valuable. And you guys continue to come back every day, and you guys continue to learn about Simona, because where else are you going to learn about Simona? All right. That's it for me. Thank you, everybody. We'll be back tomorrow on the Market Open, 8:45 a.m. Bye, everyone. Have a good one.